live then.
It's just that maybe the lighting, because I've closed my blind because it's very sunny. It's very bright. Does it look clear enough?
Yeah, I think so. Yeah, it looks good. It looks good. I think it's already live. Yeah. Hey everyone. Hello.
Hey guys.
Let me just notify Telegram analytical community, and we can
Maybe I'll put this on my head.
Dive in.
Still, is that light there? Okay.
Hello. Okay.
Okay, let me see.
Okay, let's give everyone a few moments, 1 minute to join in, and then we'll just dive in.
Just getting set up here as well, my side.
Have you been trading something interesting lately?
Yeah, I mean, I've been quite active. I had some nice Euro Aussie longs that closed out. TP today, and I had some good longs with gold last week, and I'm still running some at the moment. Obviously, during all this period of consolidation, but I'm still expecting a breakout, which we'll talk about.
Okay.
And that's it at the moment. Just a few things on the watch list though. So it's very interesting times.
Yeah, most
very
definitely.
Interesting right now. What about yourself?
I traded today the gaps, the weekend gaps.
Oh, nice.
I haven't got the exact moment when gap was filling out, but once it was filled out, when it bounced on Euro USD, took the short and worked out for me. I wanted to speak a little bit maybe about this from the start, about the gaps, because it's very, very common. And I think, if I'm not mistaken, I've read it a few weeks ago, about 80% of the gaps are being filled in
80%.
In that very day. Yeah. I usually do trade whenever the gap fills. I can maybe start sharing the screen before
please do.
The rest will join in. And okay, let me do it differently. Yeah, perfect, should be. Okay. So sharing the screen. Number 2. Okay, perfect. Can you see my screen?
Yeah.
Yeah, perfect. So usually how it works is when you have a gap, and it's 80% chance that it's going to be a fill out, right?
Mm-hmm.
And I wasn't trading this because it was too late for me. And last week I was pretty sick. I didn't really get done the analysis. So these guys, just so you know, it was caused by the US strike on Iran's nuclear sites. And I'll get to that later about the Euro possible, not shorts, but there's going to be some struggles for Euro due to the oil prices.
Mm-hmm.
But basically what I was taking is, once the gap is filled, then all the way down. And this is basically the same account where I took the Euro Australian dollar. So I'm gonna do the 1 day. That's probably the best one. 4 hours. Yeah, the gap. And when it touches the very top of the gap, when it's filled, then I'm usually trying to find opportunities to sell in this specific example. But most of the currency pairs had gaps. I kind of regret I didn't take the Australian dollar and Swiss franc, which looks really good right now. But yeah, if you guys don't know about it, I guess most of you do, then just sometimes when you see gaps, watch it and try to, maybe once you have an actual experience, once you've seen enough gaps and how price reacts, then I would advise to go for it. It's kind of, if you go back test this, you find a lot of gaps that have been filled at the very same day that the market opened.
Yeah, I just if you don't mind, Jake, I just want to throw something in, just little bit educational, just on gaps as well. I think that's a great approach and a great strategy. I think people should definitely back test the effectiveness of gaps. And for anyone that doesn't know, right? Okay, gaps obviously will happen when we have over the weekend, obviously high impact news, or a high impact event, whether that be a natural disaster, obviously war like we're seeing at the moment, or just something that could potentially move the markets. What would happen then at the open? Obviously, this is all the financial markets reacting to that news, whether it be bullish or bearish for the asset. Now, ahead of those gaps, one thing that you can observe as well is just be aware of pre-market pricing. So ahead of obviously these gaps occurring, you'll get an indication on those. I believe TradingView will show some pre-market pricing for a number of assets. So you can get an indication as to, are we going to be gapping higher or lower in whatever asset you're trading? So it's important to be aware of that. And when the gaps occur as well, like Jake said, like gaps are at some point, they are subject to being filled. Okay. It's just a matter of when. And with those, what happens when obviously the price gaps to the upside, from my perspective and experience as well, it's like at the end of the day, obviously people would have positions right ahead of the weekend before that gap occurs. So they may be long or short that particular asset. Then what happens, a classic example of what I did today as well, was when we gap to the upside or to the downside, people will tend to be, a wave of liquidations will occur, and that obviously results potentially in a gap being reduced, being filled, or you get people profit taking after that gap as well. So then we hunt to fill that gap. So that's why one of the reasons I know that we tend to fill those gaps when they occur, because of liquidations or profit taking, and then the gap comes down, price comes down or up, whatever, and filling that gap area.
Yeah. Sometimes you get into a situation where there's a gap and the price still continues downside. Mostly that's when if the euro would be that weak, that might be the scenario. But euro, fundamentally speaking, is not that weak. I took that short because euro will pay a little bit of a price based on that strike, as it will again play a role when oil prices development in oil price developments. And in that regard, might actually put some weight on the euro. So I'm still bullish on euro, yet in the short term there might be some swings towards the downside.
Definitely. I think I totally agree with you. I totally agree. I am still, for me, it's a tricky one. Like with this dollar situation, obviously for me on a macro level, I'm still sort of bearish dollar. And, I feel like one classic saying that I'm using a lot right now is the dollar in general is caught between confusion and dysfunction. People are confused as to whether or not what to do with the dollar, because on a macro level, we've had, as we've been going over in these streams, dollar fundamentals, United States fundamentals are bearish. They've been getting a little bit bearish. And then in the sense of dysfunction is the safe haven aspect of things. Is it really that functional safe haven as it used to be, with all this weight on its shoulders right now, with all the talk about, everyone's talking, all these big officials are talking about the dollar losing its reserve status. Maybe one day we can work towards, well, they are working towards that. Maybe one day we'll get there, a long time. But it's a tricky one to trade right now. And I think a lot of it may be sort of algos, algos buying dollar quickly, sort of as a default on the safe haven. I'm just not sure whether it's sustainable yet. I don't know. I can't fully say that dollar's recovering right now. This is do you know what I mean?
Yeah, me neither. I'm probably right now doing the most of the technical analysis that I did in the last 5 years on Euro USD, GBP USD, because I'm not really sure about the dollar, and I'm just going strictly through the technicals. I'm just trading fundamentals right now, the Australian dollar, because I think that, and I'm pretty convinced that on the next rate decision they might give us a 50 basic point cut, which would be very bearish, and I think that the market is suggesting so at these moments. especially if we've got lower inflation prints. We've got Australian CPI on a Wednesday, if I'm not mistaken.
Yes, that's correct.
So if that is going to be lower than expected, or at least it meets the forecast, I'll be still very bearish on Australian dollar. Matter of fact, there's the Euro Australian dollar, which I didn't take again, but this is the same chart. I didn't do nothing because I was really sick last week. So, and I remember that on Monday I was spoken about the Fibonacci retracement, the 50 level. Too bad I didn't take it, but still, I think the Euro Australian dollar has the potential to go upside. We didn't touch the 180. How far are we from 60 pips? I still believe that till Wednesday, maybe today, tomorrow, we'll touch it and we possibly break. So fundamentally speaking, for me, Australian dollar is looking good towards the downside. The one that you suggested last night, but brought up, was the Australian dollar Swiss franc, which also looks very, very good, at least to me. It's kind of bearish, but it's better to entering into already running bearish trend than doing it other way around, expecting reverse. I think franc is still fundamentally speaking strong, safe haven, and other than Australian dollar, I don't know what to actually trade right now. Fundamentally speaking, I don't want to avoid euro and dollar till we have a clear picture, but hopefully we'll get this week, with new data. Okay, I'll probably just pass it to you. I'll come up with a few questions for the chat, and I'll go through the chat if there were some questions. And in the meantime, I'll just interact with you.
Yeah, definitely. Sounds good, man. Thanks, Jake, for giving your insights there as well. It's always good to hear yours. I don't hear enough other trader perspectives on a daily basis, so it's great to catch up and get your perspective. Hey guys, welcome. See if you guys message in the chat. Fundamental gang. Yeah, we are the fundamental crew. So welcome.
There were some advices regarding patience, and I would like to just remind you that on Wednesday we'll invite Jay Vara, who is our performance coach, and at the very end of the live stream session, he will be answering the question that you will have from the different standpoint, not the charts, but trading psychology. You can ask him what you guys struggle with, and he will help you overcome that very struggle. So if you have some sort of a struggle, as any trader has, then you can join on Wednesday and ask our performance coach, JV. He's really good at what he does, so I'm kind of looking forward to it.
Nice, man. Yeah, same here. How long has he been sort of working on the performance side of things out of interest anyway?
About like specifically the performance trading, maybe 7 years, 6 years.
Wow, nice.
I mean, he already he has written a few books on that specific topic, like trading performance, trading psychology. So very, very interesting person, and he's got a really good point of views, especially for traders.
Definitely. Yeah, nice, man. All right, well, we'll look forward to that on Wednesday.
Yeah.
All right, guys, I'll give sort of an overview of everything that's going on right now, as I'm sure you guys are aware. I will start off with gold because someone mentioned it in the chat, and I know obviously gold turns a lot of people on, so why not? And obviously I'm very active in gold right now and have been. So look, as I'm sure you're aware, we had obviously US and Iran and Israel, obviously all those tensions flaring up over the weekend. Obviously Trump targeting several what they believe were nuclear development facilities in Iran. So they struck 3, I believe, and obviously Iran are not happy about it, of course. So that prompted all those gaps to the upside. Now, the reason why, obviously you'd see today, obviously dollar's bounced. We'll talk about dollar in a moment. I just want to start off with gold, but the reason why, if you notice, a lot of these gaps, well, I'd say with gold, let's start off with gold. People probably wondering, why is gold down today? And I think you have to always remember, markets are never content What does Ken mean by markets are never content? Markets always want more. You know, they always want that. This what happened over the weekend on Sunday we had the whole of Sunday to sort of digest that and understand what happened. And then markets are forward looking. They're thinking, what next? And what next would be Iranian retaliation if it comes. So that's what markets are waiting for, really, to get that serious move higher for gold, if that happens. Okay. But at the end of the day, we are still leaning towards upside pressure for gold. We're hedging still against the risk because it's an uncertain outlook, as we've been going over. So what are we expecting for gold? Now, if we just go back to the weekly for a moment, obviously last week we had a pullback. Okay. We effectively had, you know, a retest of the structure, you know, this trend line here that we've been supporting the price since 2025. And we're just in sort of consolidation mode right now. To be honest with you, I was expecting the price to fly up towards the highs of last week at the open, but we didn't. As I said, I think it comes down to markets just expecting potentially escalation, you know, to really, really drive that higher. So we're in this period of consolidation. We're pulling back. You can see, obviously, this is not just me making it up. You can clearly see, obviously, this trend line continues to support the price there or thereabouts. Okay. I did actually have some longs on Friday, and I still have some longs open at the moment, but I did have a sort of a day trade here. Again, you know, those that know, I do look to trade Asian range when and look for liquidity sweeps when the opportunity presents itself. And we had that on Friday morning, London Open. Price obviously swept Asian range low, not the cleanest of, but I'm always looking for these reversal candlesticks like we saw here, then validated by that closure above. And then I took those longs and ran it to the Asian range high up here. Okay, which was quite a nice quick move. Obviously, we had a pick up momentum there at the open, New York Open, Gold Open, and then price coming into that high area. But you see where we faltered, where we slowed down. We've basically got this trend line here, this near-term structure as part of this pullback, these lower highs, lower lows. We're respecting that structure and price action narrowing. We're trying to break out. And I think the breakout is coming. It's a matter of time. There's just a little bit of choppiness and a little bit of fake outs happening at the moment. Look, just zoom in here. Obviously, look, we're faking out here, suck back below, faking out again, suck back below. There's a lot of choppy price action, a lot of manipulation at the moment because the herd, right? This is where it's very important to note. The general market consensus as a whole, if we look at everyone's buyers, is gold long. So when everyone's long, expect manipulation. And that's what, in my opinion, that's what we're seeing at the moment. So we're trying to flush out, you know, as much as the noise as possible, and then look for a resumption to the upside. You can see this heavy supply area here for me near term where we keep rejecting. I've just got this block marked up here, and basically we're trying to regather some momentum to the upside. I think it's still possible, given this. If we go on the 4 hour, sorry, let me just go to the 4 hour moment. I still think it's possible that we pull back a little bit more before we extend around 30, maybe to around this 33.50 area, perhaps. But for me, in terms of looking for a convincing move higher, I'll be waiting for this break of this supply area here, guys. Okay, so I'm waiting for this area to be taken out. Bam, bam, bam. Then I'm going to look to add to my longs. Okay, add to my longs. Being conservative, go for the highs of last week. Okay, up here. Sorry, the week before last, up here. And then obviously, if we deal with this nicely, then we'll be looking at the all-time higher at 3.5. Number of institutions, as you know, Goldman's, for example, calling 3.7K, which obviously can come given everything that's going on right now. But this is just all sort of pullback, consolidation mode, subject to resumption to the upside. What's your take on it, Jake?
On gold?
Yeah.
Yeah, I'm kind of looking at it right now. I'm still bullish, right? Still, as you said, geopolitical tension, safe haven, still the same thing. I like kind of the price that we are right now to enter. We had a short-term correction on lower time frames, and I'm pretty sure we will continue upsides. But where to enter on gold is for me kind of difficult. Yeah, I kind of like this level to be honest. The 3.360 looks very promising to me. I mean, it's good to wait for breakout and confirmation, the one that you have the resistance, but other than that, as a swing trader, I wouldn't mind to enter right now. But as I'm getting into day trading, yeah, find a better entry is kind of key in day trading, which is also kind of new to me. So yeah, my only point of view is long.
Yeah.
Wouldn't actually dare to give a specific price or level where we might go long, or on which might we go long.
Yeah, definitely. Someone just said in the chat, can gold hit 34.17 today? I'm waiting for PMI data to enter at 33.56. Okay, so yeah, we do have PMI data, manufacturing and services PMI from the United States, which is expected to be softer. Now, obviously, this has actually been trending to the downside. The services and manufacturing data, we've seen it with ISM. Those figures have been slowing down. So I wouldn't be surprised if this further fits into that narrative and we do see these respective slowdowns, because that will provide some buying pressure for obviously for gold. Obviously, it will take advantage of the weaker dollar. By the way, there's no reason why the dollar and gold can't rise together, by the way, because I did note something before on Twitter and someone said, oh, does that mean the gold's going to sell off? Gold and dollar can both rise in tandem. You know, they can both rise together. There are many times in history where they've both risen together. So it doesn't necessarily mean a stronger dollar, gold sells off. Okay. So let's keep an eye on these data, because that would provide some safe haven flow and a reason to buy gold anyway. So it's possible. In terms of your target of 34.17, 34.17 today. Oof, I mean, I don't know necessarily. I don't think today, but it can happen. Of course, that is what I'm looking at up here anyway, into this next major zone. I'm just not sure whether that's going to happen today. 34.17, that require a over 1%, well 1.5% jump today. Not impossible. Yeah. Obviously, gold's moved like that in the past. We'll have to see. Okay, we'll have to see how that PMI data comes out. All right. I think just element of caution. When PMI is at 3 o'clock London time. Oh no, excuse me. It's in the next 15, just over 15 minutes. All right. So let's keep an eye. So it's possible. If we go over to the dollar right now, okay, because I've been speaking about all this dollar downside, and yeah, it's a tough one. I'm just going to remove these pivot levels just for a moment. So it cleans it out because it's a bit messy there. Structure is still bearish. Okay. For me to really be like, okay, we're invalidating this bearish structure, I'd want to see 100 being breached again to the upside. I want to see us taking out this sort of what we could call as the previous lower high. I'd want to see us getting comfortable here, to be like, okay, this is a big dollar recovery. Right now, I'm skeptical because this could just be a fake out. Okay, this could just be a false breakout. We haven't actually done anything drastic yet. We're just pushing to the upside. All right, on this news. So I'm skeptical. All right, I'm skeptical, guys. I'm not fully convinced. The only way I become a full dollar bull is if we break above here. All right, this 150 area. So let's see today if that PMI data is bad in the next 15 minutes, which should still be on the stream during that time. Then this should provide some dollar downside. All right, if those numbers are softer. We'll jump over to euro moment. Obviously, Jake was mentioning about being a euro bull, and I've been a euro bull for a while because I just see the fundamentals as being a little bit more stable in the euro in comparison to the United States recently of late. Today we had PMIs from Europe. PMIs, they're okay. All right, they're holding steady. They're still moving in the right direction because remember before, these numbers, like some months ago, were at like 40, close to 30s. They're like low 40s basically, and now we're back close towards expansionary territory of a number of these numbers. So eurozone fundamentals are stable, and they've got inflation under control. Remember eurozone CPI? If you look at pull it up here, EZ CPI on a year-on-year. Look, inflation's back towards the ECB's target. Remember, they want inflation down at 2%. So they have inflation under control. Data's stabilizing. The United States data has been softening and inflation's freaking high. Growth is low. So the euro fundamentals are still more sound to me in comparison to the dollar. But obviously this is, we've been, a spanner has been thrown into the works because of what's happened on the geopolitical level. So where is this going now? To be honest with you, let me just clear this up a moment. All right. Obviously, monthly, we've been on a massive bullish trend. The thing is for me, and I noted before in our previous streams, when I would say that maybe the dollar can have a chance to recover is when we start seeing a sign of reversal, when we see April's wick being filled and April's high being taken out, and we've taken out that high. Okay, obviously dollar, when you look at dollar on the monthly, we've taken out the April low. So when we see that and then room for a potential reversal candlestick, and then the next month we close above, that's when I'm like, okay, this has the legs now and the foundations to be a recovery. So that's why, as I'm sure you can appreciate, why I'm just a little bit hesitant at the moment. It's a little bit tricky. Yeah, Euro's gap to the downside. Okay, we've broken for this. Sorry, I know there's a number of trend lines here, but it's just so you can see obviously structure very clearly. Obviously, we've been printing higher highs, higher lows. We've most recently breached this trend line here, just around 115, just leaving a door to a potential fall. When we look on the weekly, I don't like to overpopulate with zones, but there is a zone there at 114. Okay, so that's the next major area of support. If this data is good from the United States, you'd be expecting the price to come down to here today. Okay, sub 114, and let's see how the price responds at 114. All right, so there's still room for structure to be held here when we look on the higher time frame, because we'd print a new lower high here, right? And then we can go and extend and print a new higher high. So long as this holds, if this breaches, then we're coming all the way down back to 111. Okay, because that's the next major area of support for me. 111.50, 111 on a nose, right? So let's keep an eye on this data today. I think it could help shape things up a little bit more for us, see where we're at. But yeah, I'm sort of on the fence right now, guys, as I'm sure you can appreciate. More on the fence. I'm going to jump over to GBP, okay, because there's a couple of things on my watch list that are GP related. Obviously, we've been screaming about this structure, how bullish it is. Nice and clean textbook, higher highs, higher lows. And we're testing. You see this key area here at 134. It's bouncing right now and it's holding. This is massive. Former supply, support now. This is big because really we want to see the price here. Look, guys, can you see on the weekly? This can be a nice new higher low for us. All right. So long as this holds, this can be a higher low. And then we can go and print a new higher high up at 137. Okay. So the foundations are there. Again, it's sort of having to sit on the fence for the moment. So I'm just waiting, monitoring, but you can just see this area at 134 being heavily defended right now for the time being. Okay, so let's see. It depends on this data. UK data today, in terms of when you look at services PMI, steady, higher than previous, slightly higher than expected. UK is not a massive manufacturer, but it came in higher anyway. Okay, and previous revised high. So data from UK is good there. But I think it sort of tilts. It's all in the balance right now, dependent on these figures here for US. GJ, I'll come to in a moment. I'll take a look at it now because I'm talking about GP. GJ, I liked the look of these longs before. Okay, what's nice about GJ is you see for a while we were capped at 195, 50, 96. See that big weekly barrier there that was massive. And last week we got a body closure above that barrier, okay, above this area of resistance. Nice body closure, leaving the door open to see something like this back into 199, 199.50, right? The thing is with yen's not that strong at the moment as well because people are getting annoyed or tired that the Bank of Japan are not hiking again. They're waiting until next year, 2026. So everyone was excited at the start of the year and end of last year that BOJ are going to be hiking rates, narrowing that divergence, but they're not. They're moving like a little tortoise, So with them moving like a little tortoise, people are like, sod this. We're not back in yen. There's still a massive divergence. You guys moving slowly. Let's sell yen. So that's why all these yen pairs quickly are trending to the upside right now. Okay, generally speaking. All right. So sticking to GJ a moment, going to go to the daily. Okay, you can see here, very clean, respecting obviously this trend to the north right now. Cleared this area of resistance, as I said, 95.50, 96. We had a bit of a breakout here of a flag. You know, I like my flags. So we had a nice little breakout here. If we were to mark up a flag, obviously that's a bit of a fake out there, but put another trend line there, you can see it's a flag, bounce off that trend line again and pushing to the upside. Now, if we go to the 4-hour moment, okay, you can see obviously we're largely in this bullish trend right now, high highs, high lows. I wouldn't jump in from here, okay, if you're looking to get in on these potential on this long, okay. Obviously we've got this little gap that will potentially fill as well with GJ. It's a tiny gap there. I would like to see a pullback. It would make sense to see a pullback back towards. So this is me marking another zone again, but I'm just showing you in blue just so you can see what would be of interest. It would be nice if we could get a little bit of a pullback down here. Obviously, that would be quite a drastic one, 100 pips, but it's not that drastic for GJ. Pull back here, print a new higher low, right, as part of this structure, and then extend to the upside in towards sort of 99s. But I am bullish this right now, given what's noted. Unless Iran go and retaliate, I'm bullish this at present. But it's just, I wouldn't jump in now. We're already up 140 pips. You know, we've been higher than that today. So just an element of caution on those longs. Wait for the price to pull back. Don't jump in out of FOMO. FOMO, that's why people get smoked. Just wait, pull back, and then dip buying looks attractive there for GJ. I'm just quickly going to run over to Euro GBP. Just want to go to Euro GBP because it's on my watch list at the moment. Okay. Right now, this is trending to the upside. Remember, I noted those fundamentals for UK, for Eurozone. Very stable right now. I'm looking at longs this week. This is on my watch list. Weekly's bullish. Nice and bullish right now. That's what we like. Yeah.
Do you have your mobile close to your computer? Because I'm hearing the sound that you can hear whenever you got a mobile very close to the computer.
Oh, I have a couple of phones. I have a couple of phones next to my computer. Let me what like an interference sound?
Yeah. Something like that. I don't know if you guys can hear it.
Double voice.
Double voice. I don't think it's double voice. It's mostly like when you have a mobile. Oh, maybe I'm the only one who can hear it. Okay.
One sec. Let me just put one moment. I'll put this over here. Further away. I'm going to put. Give me a moment.
Yeah, sure. Also, guys, about the giveaway, I was thinking about the questions again. Yeah, then I'm not the brightest one, and I didn't realize that what you can do is just copy that question, paste it into ChatGPT, and come up with the answer. So I was thinking about it. You might be interested in this, guys. We would give accounts to people who I don't know, more people than we do when we do question giveaways, but who are attending our live streams often. And what I was thinking is either providing them the free evaluation on Monday and let them trade till Wednesday's live stream session. If they pass, the account is theirs. If not, they don't have an account, or do it throughout the Wednesday's live stream. So give, I don't know, evaluation to 10 or 15 people who are almost non-stop in the chat, and just give them an hour. If you pass the account, it's yours. It's one phase, so you already funded. Maybe a little bit more engaging than asking the questions, because also it's kind of unfair. Some of you guys with a slower internet connection, late response, might be better to do it this way.
Give me one moment, guys. Someone just mentioned it in the chat as well. One sec. Maybe this will stop it. Give me a moment. Let me close this. Okay, here we go. Jake, has it stopped now, that interference sound?
Yeah. No. It wasn't all the time. It was just for, I don't know, 2-3 seconds, like every 2-3 minutes.
Okay.
At least on my end. I don't know what the chats.
Okay, I think it should have. Okay, I think it should have gone now. Okay.
Yeah. Okay. So let's do it. Let's do it. If you will then, Joe, again, sorry, if you will see some familiar faces or new ones during the live stream session on every Monday, Wednesday, I'll try to memorize them as you do more of the analysis. Then I'll just connect with you guys on Instagram. And I'll just decide whenever I'll give you from Monday to Wednesday, or I'll be pretty hard on you and I'll give you just 1 hour during Wednesday's live stream session, because I would love to monitor you trading during the live stream session, see what trades you are taking, so we can maybe analyze the same charts. And eventually, if you pass, it's your account. Might be actually more fun than just asking the questions.
Yeah, definitely.
So I'll just go through chat if people are okay with it, and if so, then at the very end, we'll go through the people who are participating or traders who are participating very often with us, and we'll give them the shot. Okay, yeah. So go ahead, Ken. And if you already have your charts back, then I'll just find out if that's going to work.
Yeah, man. Yeah, I like the sound of that. Yeah, there's a few people in the chat that I can see that are quite regulars. I don't. FX Somesh, I know he's religiously here, which is nice to see. How you doing, bro? FX Somesh. Sorry, I don't know anyone else. I'm gonna be more aware of it moving forward. Okay, I'm gonna be more aware of our
problem. Yeah, I'll take an eye on it. You can analyze, so you're not disrupted.
Yeah. Oh, we got Ray Dalio in the house. The Ray Dalio has joined our stream. Welcome, Ray Dalio. I hope you're well. Can I share my portfolio with you? Ray Dalio. Love the name, guys. Well done. All right, guys. Euro sterling. Let's talk about this quickly because some I watch this. I don't know. One of my the original chart where the analysis is not on here for some reason. I don't know what's happened. But anyway, I'm liking these longs. Okay, I'm looking at longs for Euro GBP this week. When we look, obviously, I told you the weekly already. Daily, look at the structure. It's very clean to the upside. Look at the 4 hour. It's like a staircase, right? With these higher highs, higher lows. And you see this sort of form a high area here. Okay, this looks interesting right now. Obviously, we've got a demand area here, which is holding the price at present. Obviously, we're arguably at obviously a new high here, but I'm just monitoring this for potential stabilization for longs. If this doesn't hold here, okay, so I've got two buying areas of interest here at this zone at 85.50. If that doesn't hold, I will look at this zone just below, okay, just below at around sort of 45. So it's sort of a narrow range, looking for the price print new lower high. So anywhere in this proximity, and then I'm going to look for reversal and a continuation to the upside. When I go on the weekly a moment, really, this has room to fly. You know, our next area of resistance for me would be at 86s. Okay, 86.20. Could put a whole zone here. You'd see it. You can see it. Just look left. Okay, it'll be into this pocket. And then obviously, if we can take that out, then you'd be looking at challenging these highs of 2025. Okay, 87s. So I'm liking these longs at the moment, just enduring a little bit of a pullback. Structure's very clean, as I say, like a staircase right now. And I want to see a continuation to the upside, just allowing this pullback to occur. Just depends where. Am I buying here or here? I don't think we're going to come all the way back down to this level here. But just monitoring in this sort of mid 85 region for stabilization and for continuation to the upside. So that's on my watches this week. Euro Aussie, I'll talk about Euro Aussie. I had some longs with this, similar to Jake. I know Euro Aussie's kind of Jake's baby, which is nice. This has obviously been printing higher highs and higher lows as well. Okay, very clean. The reason why I took those longs, a couple of reasons. Obviously, it's bullish top down. We had this brief pullback period, and obviously, you guys know, again, I like my flags. We had this flag forming, and I got in on this bullish 4 hour breakout here. And then it was literally, I got in a little bit late. Okay, this was, I mean, I was asleep here at 6 a.m. So, but then I saw it that morning last Thursday when I got to my desk, and then took those longs. And I was conservative with my targets. I just targeted this area of resistance here, this choppy area at the mid 79 region, and then took profits.
Did you hold it all the way to the very top of it? The trade?
Yeah. So
Yeah.
I
Okay.
let it
Okay.
run right into here. Yeah.
Yeah. Okay.
Yeah.
Maybe you might help me with it, because 2 weeks ago I said that we're going to bounce from 175, and it did about 350 pips. I made 50 pips on it, and the last week I said the 50% Fibonacci might be a really good place to bounce with it, another 330 pips, and I didn't do a single pip on it. So I'll probably need to speak to you about when to close the trades.
Yeah, man. Yeah, definitely.
That's really good. That's really good trade, this one, though.
Yeah, no, it's clean. It's clean. Nice breakout. And obviously this was helped on by, the situation with US and Iran. So obviously Aussie's very sensitive. It's a very risk sensitive currency. So I had a feeling this was just going to get hurt at the open, and obviously bam, helped me on its way. Now, for me to see further upside, guys can see, in this zone here, we've got a lot of resistance. So once we clear this again, classic break retest, I'll be looking for a push to the upside. And there's no reason as to why we can't, be challenging these highs of 2025, similar to Euro GP, just maintain a nice bullish trend, bullish structure. But I wouldn't jump in from here. I'll be waiting for a pullback, guys. Okay, just wait for that pullback, because this process right now where we're at on the daily, this is still arguably we're still printing that higher high. So I'd wait for the pullback for a new low and then get in. All right. So don't just always jump in. This is one of the massive things that improved my trading after so many years of freaking failure was Ken. And I kept reminding myself, Ken, where is market structure? Where are we at right now in structure? Because I found a lot of the time, one of the key reasons I was failing was because I was entering too prematurely. I know there's a lot of problems for traders. It's a common one, entering too prematurely. And I was always, when I reviewed back after many freaking years of failure, one of the key things was I was always jumping in when we're just printing a high. Why the hell am I jumping in at the high? Why am I not waiting for the pullback? So it's understanding now, becoming more aware of where structure's at. If I can get in, if I want to go long, I want to try and get in as close to possible once I've got my confirmation at that new lower high. At that new higher low. Okay. I want to get in at the new higher low, and then I'm going to run that to the next higher high, right? Or the flip side. I want to get in close to the lower high as possible if I want to short. So just being aware of structure can really help sort of change your trading, guys, especially when we've got nice, clear trending markets. You like trending markets, keep an eye on structure. And for me, like as being more of a swing trader, the 4 hour, okay, obviously I day trade as well, but the 4 hour is the engine for the structure for me. Really understanding that 4 hour market structure helps a lot. So anyway, on that point, allow for the potential pullback for Euro Aussie. Don't just jump in now on FOMO. Yeah, I missed Euro NZD. I was looking at these longs here, but I will say I missed it. I didn't get my entry. So for a long time, this was in this awful range. Okay, awful range. And I wanted to take longs once we had a breakout of this range and then got a little retest. We could still retest, but it just went off and obviously flew. Okay, on that news. NZD is obviously a risk sensitive currency as well. And we just had a clean push to the upside. So I wanted the price basically to come back, challenge this, use this former, resistance area, the top part of that range as new support, and then push to the upside. But obviously this has just gone clear, up 150 pips today. If we see that pullback, I might evaluate, but obviously this was a missed trade for me because we didn't get the entry, but oh well, shit happens. On to the next. What else do I like the look of? Oh, gold. Here we go. Okay. Obviously, we've just had PMI data. Okay. Oh, all right. PMIs were actually fairly okay, but gold's taking a pop to the upside. PMIs coming in at 52.0. On the manufacturing services is a good number as well, 53.1. Gold's obviously taking a pop to the upside right now, despite that figure. But then keep in mind, we have just had the comics open on gold as well. So look, guys, this is what I'm talking about. We're coming up to this area again. Let's keep an eye. All right. Let's keep an eye on this, because if we get that break, I'm going to look to add to some longs here, break retest here, and I'm going to add to those longs. All right. So this heavy area of supply near term. Let's see if we can clear it down, picking up momentum now for a push to the upside. Someone just asked me in the chat, Uche, Ken, what do you think is best? Focusing on a few pairs or looking at multiple pairs? Now, this is always a subject up for debate with a number of, educators, and traders in general. I always say, well, look, when you're first starting off at the end of the day, you don't want to overcloud your mind, okay, with too many pairs, because obviously all pairs move differently, right? They have different price movements, different behaviors, and of course, they have different windows, time slots when they're most active or least active. So imagine trying to remember all of that for 10 different pairs. It's too much for you. All right. So first things first is focus on one, understand the way it moves, the time frames that you need to be trading. Where's the most of the volume occurring for that particular pair? Okay. What data is this pair most sensitive to? Does this pair have any particular, or currency have any particular correlation with another asset, for example, CAD and oil, that I need to be aware of? Okay. So that's why you should focus on one initially, build out your full understanding of that, and then start diversifying. But again, this is subjective to my opinion, right? This is my opinion. A lot of people won't agree with it, but I think you can trade as many pairs as you like if you're aware of what's happening with the fundamentals of both those currencies and and all those different pairs. If you're aware of them, go and trade them, go and diversify it, because not every day if you're a GJ trader, you're not going to see opportunities every single day in GJ, depending on your strategy. It's not going to happen. So on those days, right, potentially, is there another opportunity over here for Euro Aussie? I know the fundamentals here. Can I take a trade here? Does it suit my strategy? Right. So in that sense, yes, I think it's good to expand your horizon. And as you know, when you're an investor, right, you don't invest just in one stock and go full port on it. I mean, some people will, but that's not the way to invest. Your investment portfolio should be freaking diversified. And I think the same thing applies to trading, but not a lot of people think of it like that. Your trading portfolio should be diversified. It shouldn't just be heavily dollar or heavily euro. I think you need to take a diversified approach. Yeah. That's just my opinion. Right.
I agree. Yeah, just to add something into the conversation, basically, I was trying to figure out this question, reviewing traders, and just from what I saw at the 8 markets, at very successful traders that are trading with us, they mostly trade like 1 or 2 or 3 max currency pairs or indexes or any other assets. So I think that if you're beginner or slightly advanced, focusing on a few currencies is better. And my personal point of view on it is basically, I think it's about time frames, because when you're trading on a higher time frames, I think you can afford to trade multiple currencies, but you're getting more towards the investing part. Like when you are building a portfolio, as when I was long-term investor into currencies, mostly exotic currencies, you then can afford to analyze, 10, 15 currencies, because you're not analyzing them all in one day. But if you're day trader, it's kind of hard to keep monitoring and watching 15 currencies and then looking for opportunities. You might miss a lot because there might be opportunity on a currency that you have analyzed at first, and at 15 currency, and you also get a little bit more. It gets a little bit more dizzy, I think, when you analyze like 10, 15 currencies. So if you're day trader, I would just stick to 1, 2, or 3 currencies. At least that's the pattern that I spot at successful in-market traders that I've reviewed, that most of them are actually like 1, 2, or 3 currencies.
To be honest, that makes sense. And that's a good word, dizzy. Like, it can definitely make you dizzy and give you analysis paralysis when you've got too much going on. And the beautiful thing I'd say, on the argument against what Ken just said is that, look, at the end of the day, if you are focusing on one or just a couple of pairs, really and truly, your trading activity should probably be a little bit lower in comparison to, or much lower in comparison if you are trading multiple pairs. And then you can focus on more high quality because you're just fixed on that. You're moving, you're in sync with that singular pair or those 2 particular assets. So I think if you're focusing on those, your quality should go up. So I'm not surprised that there's higher success with people that just focus on a couple there at E8, because their quality, I'm sure, and they're focusing on AAA, A plus, or whatever you want to call it, A plus setups with that pair. So yeah, it's good to know.
Just before you continue, I just wanted to remind the giveaway so guys can stick till the very end. Okay, so I was thinking about it, and let's do it this way. For you guys who will be participating often, like we can call it loyal to our live streams, and we'll know about you as we read the chat right now very often. We didn't from the start, but we pay extra attention to it right now. And I'll choose, I don't know, 5, 10 people from the chat who will be given then the evaluation. The only thing that I would like to know from you guys is how long would you like me to give you the account for? So let's say today is Monday, and I'll choose 8, 10 people who will be given the free evaluation to trade on. Do you want to have it till the Wednesday, and on live stream it ends whenever you pass? It's your account. You won't pass. Unfortunate. 1 week is kind of long because I would like to review those accounts. So 1 week until next Monday. Until next Monday is good, but I would like to take a look at the trades that you took. Maybe you might give me some hints for what I can get into. I think 3 days is fair enough, isn't it? What do you think, Ken?
Yeah, I think 3 days. Yeah, 3 days.
One. Okay, yeah.
Yeah.
Okay, yeah. So let's start with 3 days. I'll just choose, as I was saying, 5 to 10 people who I see very often here, and I'll just create a list of names that I'll share in the chat. If you see your name there, message me on Instagram. Usually, guys, when you message me, please send me at the same time a screenshot of your YouTube profile, because I need to verify if it's actually you and not someone else claiming your account. So when you do that, please, when you message me, please take a screenshot of your profile, send it to me alongside. And then, yeah, after this live stream, when you see your name in the chat, message me. I'll provide you with an account, and I'll be looking forward to see your results till the Wednesday's live stream session. Okay, yeah, perfect. I think it's better than asking question on every live stream and people just copy pasting it into GPT chatbot. Will be more about experience of a trader. Yeah. Okay. Sorry for interruption, Ken. You can continue as you.
No, man. No, good. I think yeah, I'll come back to these in a moment. Someone's just asking about Bitcoin. We'll just quickly, we never really go over to cryptocurrency, but I have been looking at it lately, to be honest.
Have you been trading cryptocurrencies?
Not for a while. I haven't been trading crypto for a while, but I've just been looking at it. Okay. I'm just waiting for, I basically want to see a correction for Bitcoin. We've sort of topped out this big psychological 110K mark there or thereabouts. And, you can see this big area of supply that we've entered. And I think this is vulnerable to really pulling back, sort of technically, I guess, sort of a little bit fundamentally with everything that's going on. I think crypto, at the end of the day, crypto is still sensitive to risk appetite because it's a riskier currency, to market sentiment, because it's a riskier asset, excuse me. So I'm watching this as a potential, not necessarily calling a top, but it does appear to be a bit of a double top here. 1, 2, you guys can see it. For some reason I can't draw right now, but it does look like a bit of a potential double top on the weekly there. Obviously daily structure is bearish right now. On the daily you can see a bit of a double top as well, 1, 2, and obviously we're at sort of that neckline area of support around sort of 102, 102K, which is sort of retested at the moment. So I'm just wary of that. I think at some point I'd like to see a pullback towards sort of 80K. I think it's possible. I mean, if 80K gives way, then it'll be obviously trouble for Bitcoin. But if we do have this economic downturn, which I'm expecting, then there's going to be a lot of bargains. Okay, there's going to be a lot of bargains for stocks and crypto. But yeah, I think this is coming to the downside, in my opinion, guys, near term. I'm just going to go back to gold. Keep an eye on gold right now, by the way, guys, for additional longs at present. We're still challenging this supply area here. Okay, still challenging the supply area. And just looking for a clean break retest of this supply area. I was looking at NASDAQ as well, but basically, how spoken about the open range, right, of the 15-minute candlestick when stocks open from the low to the high. The candle is a bit of a bullish pin bar there. We're just trying to take out the highs at the moment overnight. And then, watch this potential pullback and retest. We might get it, we might not. Keep an eye on this pullback and retest here. If it holds, and then a push to the upside. I think NASDAQ is so weird. Like stocks are just weird. They're at a touch of reality. It's so strange because, we've got all these fears in the world, everything that's going on, but people are still buying the dips. It's insane. What do you think, Jake? Why are people still buying stocks? People still buying stocks.
Well, didn't Donald Trump tweet it on his Twitter profile to buy stocks?
Yeah.
I don't know. I'm not indexes or stock trader myself. I've never been, actually. I was trading just Forex and bonds, sometimes commodities, but I've never bought a stock, to be honest. So,
yeah.
I mean, it's still a very good investment compared to risk reward. So, well known for ordinary people to invest. They mostly go with stocks.
Yeah. Yeah, I think what the hell? Yeah, I think at some point it is a bit of a bubble, in my opinion, but let's see. I think it's a bubble waiting to burst. But yeah, anyway, I'm pretty much done on my side, but I think gold has room to fly. It's just a ticking time bomb, trying to take out the Asian range high, trying to take out that heavy area supply. I don't know what's going on my trade view at the moment. It's freaking out. There we go. We're just trying to clear this area right now, guys. So once we clear this, I think we're going to go. It's going to go to the moon. Soon moon. But yeah, let's see if we can break it down. That's it that I want to talk about today, Jake.
Okay. Yeah, thank you very much. I don't think I have something additional to what you said, because as I was saying, I'm still waiting for the dollar till it will be on some sort of a scenario or level situation where I can be trading it as well. For me, is still very risky.
Yeah.
And with the happening on the weekend, the strike, I'm also a little bit afraid of the euro. I'm still very bullish, don't get me wrong, on euro, but kind of the only pair that I'm pretty confident that I've analyzed well and that should go the direction that I've analyzed it is the Australian dollar. Yeah, just from fundamental standpoint, the GDP is going down, the inflation is pretty much stabilized, and they need to cut. So in order to again kick off the economy, start producing, start selling, to bring better numbers for the GDP, for the growth. So I think the cut is inevitable, and I think the market will start pricing what most of the reporters are expecting for the next month, the 50 basic point cut.
Yeah.
If that goes down and there will be only 25 basic point, I will be still bearish, but we might see some slight bullish momentum short term. But I don't think it will come any day, at least not this week. Yeah, and looking at the index right now, I'm still very bearish.
Yeah,
The only thing that I'm right now is that I'm thinking about is what to buy against the Australian dollar, and actually the only two options, at least right now for me, are euro and Swiss franc. Maybe the pound. Do you believe the pound has potential to continue upside?
Yeah, I do, because look, I think the Bank of England are going to be slower in terms of their rate cuts. Rates are still sort of generally higher in the UK versus its peers. I still think, in terms of sort of sensitivity around fundamentals with UK, I still feel like they're in a little bit of a better position in comparison to, Aussie NZD, for example, where they're exposed to China. So yeah, I'm still generally speaking, I'm still a GBP bull right now.
Okay.
Yeah, I am.
Yeah.
I am.
Just to read in the chat about oil.
Yeah, I just brought up the oil chart.
Yeah. Okay. Do you have some issues with TradingView? Because at this moment, I'm also experiencing something with TradingView. My analysis of oil, I mean, my drawing, trend lines, supports are just gone.
Yeah. Try refreshing the browser. I just had to refresh the TradingView, the website, and that helped. Mine was all frozen as well. I couldn't really draw anything.
I'm back.
All right, you're back. Do you want to quickly go through?
Yeah, I can go for it.
Yeah, go on.
So fundamentally speaking, guys, for the oil, we still have the tension whenever US will strike again or Israel will strike again to Iran, and we might got another oil disruption. Where's the share the screen, which will push the price of the oil higher. And share the screen. Where is it? Yeah, here. Okay. Yeah, can you see my screen?
Yep.
Yeah, actually, this is the same analysis that I was sharing on last Monday before I went sick. And we were talking about the trend line, which still holds for me at least. But we are also talking about the 70 level where I didn't bought. I was waiting for something a little bit better. Still kind of think that oil will break above. In my view, what I think what can happen is just for a little bit going sideways, and I'll be expecting break soon. Maybe again go to the 70 level, where if we go to, I would gladly buy again because I didn't do here. And yeah, for me, oil is as well as gold now due to geopolitical tensions or kind of bigger geopolitical tensions is a good market to trade towards the upside. Do you have similar views on a gold on oil, or are you bearish, bullish?
We've run into resistance for oil at the moment. We've run
75.
Into 70, sort of 76, 75 area. The thing is, I've got, I think similar to you, just basically there's this descending trend line that's been in play from September 2023.
Yeah, this one.
Yeah. Same. So unless if Iran, if this situation escalates, i.e. war, and US are active, then obviously it's trouble. Or if Iran closed the Strait of Hormuz, where obviously 20% of global oil supply flows through via ships, if they close that, then oil will continue to the upside. But if this stays the way it is and we don't see any escalation, then oil should correct itself. So let's see.
It would be better to buy if there's the correction at least to 70 or 68, where I would initially hoping to buy it. But if there's going to be a correction to 70, I would gladly buy there. If not, and we break above, I'll be probably buying towards at least 80 because I still believe that 80 is kind of good level, and I think the market might go towards that level. So not this week, not next week, but next month probably, maybe, hopefully.
We're
that's the way.
It looks like, when you look at the it's so choppy now, price action. Sorry, Jay, I'm just jumping over to back to the dollar for a moment. It looks like when you look, we're the dollar's losing ground again, and we are trying to fill we're going for a fill of these gaps now, trying candle body fills of these gaps, and it looks like we've bottomed out. When you look at euro, you look at GBP, it looks like these bad boys are ready to fly again. Serious, man. It looks interesting. We look like we've got some double bottoms on euro, double bottoms on GU.
Do you want to share the screen again, or is it?
Yeah, I'll quickly share the screen again. Just share here.
Also, someone is asking in the chat, kind of good question. Some Fed gives to dovish sign cut in July. It's possible, Ken?
Dovish in July?
Yeah.
I mean, you have to think the current pricing for Fed action is, all the volatility is 50. When I say 50, I'm talking about 50% probability, more or less, September, October, November, December cut, those sort of months in Q4. So in July, yes, these guys can take a little pivot and take that dovish tilt now, I believe, given obviously all these this global uncertainty, but we need to see inflation coming down.
Yeah.
Okay, we need to see inflation coming down. Guys, sorry, I'm going to be honest here. I've actually forgotten what CPI came out most recently. I'm just going to check. All right,
new PCI on Friday, so
yeah,
will be updated.
Yeah, so we got that. But when you look at the CPI numbers, they've cooled a little bit. You know, they're not rising as fast as what they were, and we are closer towards that 2% mark. So let's see if we get another batch of softer inflation data. Obviously, we'll keep an eye on the PCE. If we get softer inflation, then yes, the Fed are going to pivot come that July meeting. All right, and that will hit the dollar. Okay, remember I said before in a previous stream how obviously dollar bearish I was. The only thing that we could argue that's keeping some bullish support for the dollar, like a clear fundamental, was the fact that rates remain higher in the United States. But even then, people are still getting the hell out of there, or have been, you know, with all that money that's left the United States. So that could really be a nail in a coffin. Look, we're flying here. EU, GU. I've got a bit of FOMO right now. I'm not gonna lie to you, because I've been talking about this zone here for GU holding. And when you look here on the weekly now, it looks like a perfect potential higher low. It looks gorgeous, because look at this staircase. Oh my gosh. So I'm watching this today for potential longs. It looks good. And we've got what I was talking about here is a potential double bottom forming. All right. We've got one bottom here, two bottom neckline here. Nice little W potentially here. Going to go towards that neckline up at 135. I do have buy stops for GU at 135 stacked up. At 135 on the nose, I have buy stops for GU. So let's see if those come into play. But we're good. Flying right now.
That looks good, actually.
Yeah, man, I'm excited. I'm excited. You know why? I'll tell you why. Because, like on trading Twitter's trading space, people are giving me freaking stick, man. You know, like, oh, this guy. You know, he's such a dollar bear. Doesn't he know that this and that and da. Like, people have been giving me stick. So I'll be so relieved. I will sleep well tonight. I'll be like this, really peaceful, knowing the dollar's back under pressure. I'll be like, oh yeah, back to business. So yeah, man, I'm hoping we see that dollar weakness continue.
Very possible.
Yeah.
If we keep with that momentum, yeah. Be a good trader.
Yeah, man.
Perfect then. I think I've said what I wanted to say. Just one more thing what I wanted to mention when we were talking about the PMIs. Guys, if you are fundamental traders and you are just trying to figure out what fundamentals are causing what on markets, the PMIs are also kind of important. Just so you know, because I've been asked on Instagram, I would say for US are both services and industrial manufacturing PMIs. But if you in the Europe, just remember that manufacturing in Germany and services in France, those two are more important than services in Germany and manufacturing in France. But I think PMIs, at least I've traded them a few times, and they can generate a lot of momentum. It's on a monthly basis, as most of the indicators. So next time when you'll be watching PMIs of the Eurozone, watch for manufacturing German PMIs and services in France. Also, at the same time, the level 50 is crucial. So once we are breaking from below 50 to above 50, it's more important the other way around. When we break in from above 50 to below 50, it also creates more momentum, more volatility. Just wanted to mention that at the very end. That's also from me, everything. And I'll just probably right now go to the participants and choose a few couple of traders who will be given the evaluation. Kind of looking forward to it. If you guys are able to trade it till Wednesday, which is kind of a short time period, but as most of the traders that I've seen at the end markets, they are scalpers or day traders. So yeah, kind of looking forward to see it. If that won't work, guys, we'll figure out something new to keep it engaging. But I think we can make it work. Yeah. Probably takes me a while. I'll just downloading or importing the list of participants, and probably some of you guys I already know from the previous live stream session. But if you can give me like 10 minutes, I'm not going to do it here live, but I'm going to deliver it in 10 minutes into comment section of the live stream. So this is going to be published, the recording of live stream, on our YouTube channel, Aid Markets. So if you then can go just to that very recording and look into the comment section, I'll include all the names of people who will participate in this trading giveaway till Wednesday. Yeah. Okay, perfect. Yeah, so thank you very much, Ken, for participating or for being a co-host. Is it co-hosting
Yeah,
a
man.
live stream? Yeah. Thanks for your insights. Thank you guys for watching, for engaging, for being active in the chat. I love the questions. So thank you very much, and I'll see you on the Wednesday again.
Thank you guys for attending. We'll see you on Wednesday.
Yeah. Okay, guys.
Awesome.
Take care.
See you. Bye.